Mike Breese is in the studio with us today. Mike, welcome to the show.
Hey, thanks for having me again.
All right, you're welcome. All right, Mike is the president of Pinpoint Homes. PinpointEG.com is the web address. You guys wanted to bring it up while we're talking. Mike, give us a little background on yourself. I know you've been here on the show before, but we may have new people that show up. And then Ed, jump in too. And I want to talk to you about the fund, the senior program, and what it is that Pinpoint's doing and where you're going.
I'll give the background relative to what we're going to talk about today, I guess. I'm a real estate investor and now running a fund, and I've been investing in real estate for the last 14 years. Started out on a, kind of one-by-one basis. Actually still own that first property I did.
Cool.
It was supposed to be a flip, but
Nostalgia.
We'll talk.
Yeah, it's like trading, that trade that became an investment.
It did, a very long-term one. But learned from that. And so through those experiences over the last 14 years, building a company that actually did a lot of rehabs for companies like mine that I have now, private equity groups, banks. Did over 35,000 rehabs in 8 years with that business.
Mike,
Pretty
wait.
good.
Can you go back and repeat that number?
35,000.
35,000 rehabs
In 8 years.
In all 50 states, yeah. Yeah, started from zero, and, with every entrepreneur and every new business, there's a little luck involved with hard work, right? And definitely timed the market when the market was going into the recession, and the banks were taking back all these properties, and then private equity groups were scooping them up at, huge discounts. It was just the timing was great for that business to provide the contracting services they needed. So that went from 2 a month to quickly 600, 700, 800 a month within 3 years.
Wow. Organizational skills. Tell us about building the business.
You have to invest in it. And I'm glad that the heads that were involved at the beginning of that company were aligned in knowing that we needed to do that. You needed to use technology in order to manage projects in all 50 states, to manage that number. We had strategic competitive advantages, differences that we employed, included buying our own materials. And so accounting for that job by job, client by client, when you've got over 40 clients that you're performing these things for, we knew we needed to invest in ourselves and invest in technology to perform what we were doing at peak
Mike,
ability.
when you first started doing this, and you talked about the technology, you talked about the way that you did it, what made you decide to vertically integrate it? I mean, was there something you saw with both controlling the materials, the process, and the contractors that you saw brought a tremendous amount of efficiency to what you did?
There was a lot of people involved, so I don't want to take full credit. I had a great management team that worked for us that helped bridge the gap to what's going on in the field, to what we were dealing with in the office, to what I was dealing with when I met with clients. And so it was a collaborative effort of everyone coming together and saying, here's all the process, procedures, and things that we need to do, and we need to do it at this volume. So what can we build to service it? And I actually spent a lot of time trying to find this technology. I was hoping it was on the shelf. It was something I could just go out and buy, and it would take care of it. There were things that did pieces of it, but nothing that did the whole thing. And so that's why we hired our own IT team, our own CIO, and we started building from scratch, literally from scratch, the whole program that we built.
So it was important when you started, not just to have, the physical side of it, but the technological side to manage both the contractors, the products, the houses that you had, in addition to the debt that was related to it. Was the file that you had and the information you had kind of all-encompassing in that way, where you had all that cost built into one platform?
Yeah, we had to. I mean, your margins, despite what maybe some stories out there, I made $100,000 on that property, I made $100,000 on that one. That's happens, but it's not realistic. It's not what happens on every property. And so the margins are so thin that you have to track all your costs and all your functions very tightly. Otherwise, it can get out of hand and get out from underneath of you. And so we knew we needed that technology to support managing every cent that came in and went out. And that's what we were able to do. So when you're operating on 68% margin like we were in the rehab business, or now when you're looking at a fund and you're managing, 15 to 25% returns, hopefully, if you just let money go out the door, which it quickly can in construction, I think everyone can either attest to themselves or know someone that did a construction project and it went over budget and went long, right?
That never happened.
So with this technology, we're able to keep the I's dotted, T's crossed on the money and ensure we're getting the best returns for what we're deploying.
You're working in a different market from a generic point of view to actually getting more narrowed down to this senior program, right?
So within the fund, we have a program, like I spoke a little bit about it last week, where we really can help out our communities and our seniors. It was presented to us that there was a challenge of getting seniors from their homes to assisted living or even downsizing. Oftentimes they've been in these homes for 30, 40, 50 years. And, dealing with a realtor, dealing with showings, or needing the cash to go to the next place. They don't have generally jobs anymore, so income for loans isn't there. So they have this bridge. They need a gap between exiting out of their current home and going into the next spot. And what we did is provided a program that said, hey, we'll close on your house. We'll give you your cash that you have in that property. We'll give it to you now. We'll give you up to 90 days to transition out. We'll help you with your belongings. A lot of in 5 years I accumulate a lot of stuff each place I go to. 30, 40, 50 years, can imagine how much is there. And so we say, hey, take what you want, and what you don't want, leave behind. We'll take care of it. And so it's a nice program. It's really helped a lot of seniors already. I'm excited about it. I want more seniors to know about it. That's part of why I'm on the show, that we can help them. We can help bridge them from where they're at right now to where they need to go and give them all the tools they need to get into that next phase of life, wherever it might be, whether it's assisted living or just downsizing.
Is there a market that has been more proactive with you than others, and where are you focused next with the company for market penetration on the senior program?
Well, right now we've been deploying this program specifically in Minneapolis, but we do plan to take it to all the markets that we're going to invest in, like Dallas, where I'm here today, Houston, Phoenix, Raleigh. There's different areas that we're going to go to. So once we enter those markets and we're active in the real estate there, we'll extend all these programs to wherever we go.
Got it. Let's do this. Let's take a break, and on the other side of the break, I want to talk about how you built that fund. All right.
Sounds good.
All right. Mike Breese, President, Pinpoint Homes, pinpointeg.com. We'll be right back on the other side of these commercials. And you've been listening to CEO Money with Michael Yorba, Ed Baxter, and Mike Breese. Segment brought to you by Tycon Partners. We'll be right back after this break. Welcome back to CEO Money. Michael Yorba here. Thanks for joining us. All right, we are back, and we've got Mike Breese. He is the president of Pinpoint Homes. I'm sorry if you heard us chuckling a little bit before we came on. We're having such a great time on the break. All right, Mike, when we left, we were going to come back and talk about how you built the fund. And I think, Ed, you had a couple of questions to really drill down on kicking that conversation off, right?
Yeah, well, the difference is in the past we've seen investor by investor, investors and looking at different properties. Mike, this particular fund takes you to a whole new level versus what you've done in the past, where you look at it as more of an institutional product in lieu of a product that might be somewhat non-institutional. Talk to us about how you arrived at that decision-making process and what you see going forward as the fund starts to grow.
Yeah, you're right. Up until this point, I've been doing it privately with my own capital and just myself. And then I started that business that we talked about with the 35,000 rehabs. So that kind of took me away from investing in real estate as much. Growing that business took a lot of time, but I learned so much, and my passion was the real estate. That's why I wanted to get back at it. And learning how to build that other business, scale it, had the technology I kept to myself. I kept the ownership of that. I wanted to parlay that into doing it institutionally for others. I seen a lot of folks out there that want to get involved in real estate. They're passionate about it. They might go to a seminar. There's so many of them, but haven't really found a good avenue for them to go down. And frankly, probably not the guaranteed way of, or not guaranteed, nothing's guaranteed, but not the solid way we could provide returns. So we decided to build this fund so that we could bring in other folks and help them get involved in real estate. And for me, the selfish part of me was also to build another big business again. So that's what we're on our way to doing.
Yeah, we've seen him do that before. Go ahead.
Yeah, I was just going to say, you can tell by just being across the table from you, it's not about the money with you. Yes, everybody wants to make more money. It's about the passion for your business. I can tell that's what it is. That's, in my opinion, that's really a large part of what makes you so successful, is because it's your passion. You're in it, and it's not just another way to make a dollar.
Yeah, 100%.
Well, you don't take a company from 0 to 32 million in sales by just being a guy who likes to do business. You're a guy who's passionate about what you're actually doing. Mike, when you look at the real estate industry right now and across the board, why do you think now is a great time to do this?
Well, it's pretty easy right now with a lot of the markets growing. I personally have invested in both a receding market and a growing market, and there's opportunities in both. But I just think there's a lot of, for the locations that we're going to, there's a lot of aged inventory that needs to be updated. Whether it's Minneapolis, whether it's Dallas, whether it's, Houston, wherever we go, there's housing stock that hasn't been touched 30, 40, 50 years plus. And with this is why our senior program is so attached to what we're doing. A lot of these homes are folks that have been in there for that amount of time, and they've kept them up great. The houses are in great shape, but they're not the modern looks. The new cosmetics, the new open spaces that folks want. They don't have the master suites that everyone's kind of getting used to getting. Right. So those are a lot of things that we're doing to these homes, and so it's a good time because we can get in with these homes that are built in the 50s, 60s, 70s, are built great, but just need to be modernized to what the new buyers of today want, and there's a lot of opportunity for that.
So you found a niche market that some of the real estate investment trusts are just like, I'm not doing that now. You've focused in on an area that really has been neglected that you're going to be able to I hate to say the word exploit, but leverage. Am I right?
Yeah, absolutely. I mean, there's very few that are doing residential real estate at scale. There's plenty of REITs that look at commercial and multifamily. There's not many that are looking at the single family. There's some. I've worked with some of them. Some of them were my clients. Mm-hmm. But they're more focused on rental. They're not repositioning these assets to put back to the market for those first-time home buyers. And what I see, why we love what we're doing and why I'm passionate about the market segment we operate in is it's generally first-time home buyers. You can't build a house for what we can do with these days. And I think that's why there's even more of a need to take these homes that already exist, have a lot to them, polish them up with $50,000 to $100,000 worth of investment, and it can go to a first-time home buyer, a family's first home, young professional's first home, for a price that's affordable. Mm-hmm. They don't have to go out and build a McMansion or try to even replicate the 2,400 square feet we're giving them in a new lot and a new build. It's going to be more, and generally away from the city. And a lot of people like to be close to the city. It's where they're working. They don't want to deal with the commute. So we're focusing on metro areas mm-hmm. that are close to the city, that have a lot of job stability and job growth and buyers that want to get into those homes.
Yeah, before I move on to your Houston project, and I want to be able to get that in before we close out, have you found generally when you have an industry like yours and you're in your niche in that industry and it's showing some success, generally you get financing companies that want to attach themselves and become part of your business. Is that happening with you, or is you keep that part outside?
I don't do any of the financing, but the financing we need, I have from relationships I've had with the local community banks.
No, I meant people that are coming in to try to buy your properties from you.
Yeah, yes, a lot of them are getting financing anywhere from 3% down to 20% down. I'd say the most common thing I'm seeing is 5% down conventional loans. There are a lot of 3% FHAs coming through, but the mortgage market's good. I've had knock on wood, this year and last year, I don't think we had a deal fall through based on financing. So once they underwrite you and pre-approve you, that pre-approval means something these days, I think. And then it just carries forward once the deal's done. Your last little hitch usually is the appraisal. And out of the 70 homes we've done in the last 18 months, we've only had 2 not appraise. So I think even the appraisals are recognizing the value of these homes too.
We got about a minute, call it less than that, about the Houston project. Real quick, give us a snap on that.
We're going to go down there hopefully very soon here and help turn around some of that distressed inventory that was hit by the Hurricane Harvey there. There's 170,000 uninsured homes that will likely go to short sale foreclosure, or has someone in there, a family in there, but doesn't know how to do what we do. And we can partner together with them to repair that home and even do more than it had before with it. Or it might be something where we're taking it empty and refurbishing it and repositioning it. So we're excited to get that going here soon.
Good. All right. In order to reach you, anybody that's interested in our audience, pinpointeg.com, right?
Yep. And my email is mike@pinpointeg.com. My phone number is 612-978-3688.
Great. All right, Mike, thanks for being on the show.
Thanks for having me. It's great.
My pleasure.